In the middle of the worldwide economic uncertainty, there is a lone voice that sticks out, the one who proposes a rather unorthodox approach, keeping cash on hand. Come with us as we break down Peter Schiff's contrarian strategy and find out why cash can be king in this uncertain world. If you've been following our in-depth exploration of the dynamic world of finance, you're welcome to return for another episode. Peter Schiff's position on holding cash in 2024 is today's fascinating subject. With the global economy experiencing unprecedented challenges and opportunities, Schiff's observations are more essential than ever. Now let's set off on this adventure together, investigating his reasoning and the consequences of his method. First, let's lay the groundwork for Peter Schiff's viewpoint. There is a lot of unpredictability and volatility in the financial markets in 2024 due to the fast development of new technologies. Institutions and people alike are rethinking their approaches to wealth preservation and growth as traditional investment techniques face scrutiny. In this context, the contrarian opinions on cash holdings of Peter Schiff, a famous economist, financial analyst, and CEO of Euro-Pacific Capital, have come to light. While many call for aggressive investment in stocks, real estate, or a cryptocurrency, Schiff stays unwavering in his belief in the enduring worth of cash. Have enough of cash on hand in case things go dicey. It provides liquidity, flexibility, and a buffer against market downturns. While it may not offer big returns in the immediate term, it acts as a vital asset to capitalize on opportunities as they occur. Schiff's approach challenges conventional knowledge, which generally emphasizes the need of optimizing returns through active investment. However, his perspective is anchored in a fundamental grasp of economic cycles and risk management principles. According to Schiff, cash serves as a strategic asset allocation during moments of economic downturn or market instability. By retaining liquidity, investors can capitalize on distressed asset sales, grasp inexpensive opportunities, or simply weather financial storms without resorting to panic selling. Cash isn't just a placeholder, it's a strategic allocation within a diversified portfolio. While it may not yield the maximum profits during bull markets, its stability and buying power preservation attributes shine during times of crises. Schiff's worldview extends beyond individual wealth management to macroeconomic policy advocacy. He's been vocal about the risks of excessive monetary stimulation, inflationary pressures, and the erosion of purchasing power over time. By advocating for retaining cash, Schiff underscores the significance of prudence, discipline, and long-term thinking in managing the difficulties of modern finance. His warnings about the perils of speculative bubbles and unsustainable debt levels have earned both praise and condemnation from fellow economists and investors. Artificially low interest rates and excessive money printing may provide the illusion of prosperity in the short term, but they inevitably lead to malinvestment, asset bubbles, and economic imbalances. Holding cash provides a cushion against these systemic hazards. As we reflect on Peter Schiff's perspective on storing cash in 2024, it's vital to evaluate the broader ramifications for individual investors, financial institutions, and policymakers alike. In an era dominated by uncertainty and rapid change, his contrarian approach offers a crucial counterweight to conventional market opinion. Indeed, the ramifications of Peter Schiff's perspective on retaining cash extend far beyond individual investment decisions. Let's analyze how his contrarian approach connects with diverse players in the financial industry. For individual investors, Schiff's recommendation for maintaining cash highlights the necessity of diversification and risk management. While the temptation of high-risk, high-reward investments may be alluring, maintaining a portion of one's portfolio in cash can give stability and resilience during stormy times. Peter Schiff's emphasis on holding cash coincides with the concepts of sensible asset management. By balancing riskier investments with cash reserves, investors can limit downside risk and grasp opportunities when others are forced to liquidate. Financial institutions, too, might derive useful insights from Schiff's perspective. Amidst rising regulatory scrutiny and market volatility, maintaining adequate cash buffers is vital for defending solvency and ensuring operational resilience. Schiff's advocate for keeping cash encourages financial institutions to adopt a more conservative approach to liquidity management, lowering reliance on short-term funding sources and fostering a more sustainable balance sheet structure. Banking executive. In today's interconnected global financial system, liquidity is the lifeblood of stability. Peter Schiff's emphasis on retaining cash serves as a reminder of the significance of having substantial liquidity buffers to withstand unforeseen shocks and disruptions. From a policymaker standpoint, Schiff's contrarian attitude on hoarding cash raises crucial considerations regarding the efficacy of monetary policy tools and the unintended effects of unorthodox measures. As central banks deal with the dual responsibilities of generating economic development and controlling inflation, Schiff's warnings about the hazards of currency debasement and asset price inflation resound strongly. Peter Schiff's critique of monetary stimulation and his advocate for keeping cash illustrate the fundamental trade-offs in central bank policy. While accommodating policies may bring short-term respite, they can also distort market signals, feed speculative excesses, and weaken the purchasing power of fiat currencies. In conclusion, Peter Schiff's perspective on storing cash in 2024 offers as a timely reminder of the significance of caution, resilience, and critical thinking in navigating today's complex financial situation. Whether you're an individual investor, a financial institution, or a policymaker, his contrarian approach gives vital insights on managing risk, protecting wealth, and safeguarding against systemic problems. As we continue to navigate the uncertainties of the future, let's follow Schiff's admonition to preserve a healthy skepticism regarding prevailing market sentiment and embrace a diversified strategy to asset preservation and growth. That sums up our in-depth review of Peter Schiff's stance on storing cash in 2024. We hope you found this exploration insightful and informative. Remember to stay curious, keep informed, and stay empowered in your financial path. That concludes our discussion of Peter Schiff's stance on storing cash in 2024. We hope you found this deep dive enlightening and thought-provoking. Remember, in the changing world of finance, wisdom frequently rests in challenging the current quo and accepting alternative ideas. Until next time, remain informed, keep interested, and stay financially empowered.